Welcome to Indianomics. This show is geared to preparing us for April 2nd when reciprocal tariffs may be imposed by the US. We seek to understand which Indian products or sectors are in danger and hence how should we negotiate the bilateral trade agreement. First, we're going to be joined by agri-experts, Ramesh Chand, the member agriculture from the NITI Aayog, and Harish Damodaran, the agri-affairs editor at the Indian Express. Thereafter, on non-rural issues, we will be speaking with Ajay Srivastava, head of the Global Trade Research Initiative. But first, let me welcome Dr. Ramesh Chand and Harish Damodaran. Thank you very much, gentlemen, for your time. Dr. Chand, to you first, sir. Which Indian crops will be impacted if we cut tariffs on US imports? Do we have to cut tariffs for all countries or only US?
Lataji, I feel before jumping to specifics, we should talk a little bit about wider implication of what President Trump is seeking in trade from other countries.
Okay.
You see, now reciprocal tariff means that if every country has to have same tariff, then you lose the opportunity to take advantage of trade. Second is that these things are agreed under WTO, under multilateral trading agreements. So if Mr. Trump goes his way, I think that will unsettle this multilateral trade agreement, and every country will be forced to have two kind of situation, one in response to what US demands, and second is in general what we have committed under WTO.
What you're saying is, let us assume that the US says the difference between average Indian tariffs and average US tariffs is, say, 10%. So he imposes 10% on all Indian goods, and we also have to only bring it down to 10. You're saying that we will have a separate tariff for the US and separate tariff for non-US countries. Will that be the situation that we can live with, or will we be pulled up by the WTO?
You see, it is not only India. He's asking for this thing to every country.
Okay.
I think in this kind of situation, I would have expected WTO to call a session and discuss that how we deal with this situation. Right now, Mr. Trump is looking at interest only of US, and he is asking other country that you align your tariff and your trade to my situation. So it's a very complicated kind of situation. But in the short run, I think in order to avoid disruption in the trade flows, in order to avoid sudden change in situation, countries will adjust to reach some agreement with the US, leaving aside whatever is the most favored nation agreement with other country. Okay. I foresee that kind of situation.
Okay, so just to for purposes of economy of time, let us assume we have different tariffs for US goods and for the same thing. Say, for instance, milk. The tariff, milk powder, tariff on US is less, but it is more for New Zealand and Netherlands. Let's assume that. Still, if you can tell me, what will be the vulnerable families? Are we looking at, 40 million families endangered? How serious is the impact?
You see, we are exporting a couple of products to USA. In many areas, the US is not likely to push export of those products which we are exporting to US.
Okay.
So in order to accommodate tariff, you see in trade negotiation, it is not straightway 2+2. Okay. There are so many ways in which the interest of US can be taken care of. Okay. Like that we export rice to US and many other countries. Still we are having duty of 30%, 40%, depending upon type of rice. As an example, we have that duty.
Yes.
So those commodity where we have strong advantage in export, where we are exportable, I call such tariff as redundant.
Okay.
So we can reduce those kind of tariff even to zero to see to it that that this gap between the tariff which US impose on our export and but we are having on their items.
Okay.
This kind of possibilities are there in couple of sections.
Okay, so then that will be the key question to you. How will India tackle it, or how should India tackle it? But before that, let me get Harish into the conversation. Harish, what is your sense? Will there be any flood of imports from the US that you fear?
I don't think immediately, immediately, I don't think, like, for example, I don't think dairy products from the US are going to come. I think we have more to fear when it comes to dairy products, more from New Zealand or Australia or European Union than the US. And I think that the US basically wants to export, corn, cotton, and soya bean to India. I think these are the main things, And plus, I think the US is losing a major buyer, which is China, so because that is a real trade war. So it wants some kind of a replacement market for China. And I think these are the three commodities which they are really interested in, in corn, in soya bean, and in cotton. Whereas I think India, will stand to lose. I mean, a market, say, for example, shrimps. I think we do something like $2.5 billion. If tomorrow, if they were to impose, 30% import duty on shrimps, which is what the duty which we impose,
Yeah.
So going purely by the logic of reciprocal tariffs, then definitely that's going to be endangered. And same with, I think, Professor Ramesh Chand talked about rice, So tomorrow, if they were to impose, 30% duty on basmati rice. So I think we have definitely our export interests to defend.
Okay. So,
And regarding those other commodities, as I said, we need to take a call on those. And other things like, almonds and walnuts and all, I don't think we need to, because we hardly produce those things.
oh, right. Okay, so according to you, exports are the ones that you would concentrate on, and there you think vulnerability of rice and shrimp. Dr. Chand, now for the real meat question. How should India go about tackling this reciprocal tariff threat?
One is, as I already mentioned, that we have scope to reduce import tariff on many commodities without any threat of large import coming into country. Like, for instance, we are putting duty of 100% on tea. Now, US doesn't export tea to India. That is for, say, other country like Sri Lanka or Vietnam, those sort of countries. So if you look at case by case, commodity by commodity, there are many areas where India can accommodate, but US want from India. And in this kind of situation, I feel we have to go for give and take, and already negotiations are happening, and ultimately we should move in the direction of bilateral trade agreement where the interest of both parties can be addressed. Even if we are having high bound tariff in some commodities, that is not that we are always applying. That is in case of special situation when international prices crash. It is that kind of situation that in order to maintain some sort of price stability for our producer, we are keeping that as a cushion. We are keeping that as a safeguard in those kind of situation. We hardly go to that kind of situation. So in bilateral talk, this kind of possibilities, flexibility can be built.
Okay.
So I think we should talk. We should just look at where we can accommodate US interest.
What is your best guess? What happens on April 2nd? Will we just promise this bilateral and get away with the status quo?
You see, it's very difficult to predict Mr. Donald Trump, but we should be trying is that we should seek more time. You can't do these things just under kind of hammer. So we should seek more time, and we should engage more frequently. And as I said, that in this situation, we should try to have a bilateral trade agreement with the USA, which is mutually acceptable to both the parties.
Okay, I guess that's why Mr. Piyush Goyal was in the US, and that's what they're trying to hammer out. Harish, what is your suggestion? What is our best way out, and what are you expecting on April 2nd?
No, April 2nd, let's forget it for the moment.
Okay.
But I think definitely I think there is a possibility for a bilateral trade agreement, and I think maybe we should retain our WTO bound tariffs for the present. But when it comes to the US, maybe we can have some kind of a special duty dispensation, maybe some kind of a tariff rate quota. We can say, hey, we'll buy so much of soybean oil from you at a concessional rate of duty. I think we can do something like this. So see, they want market access, and which we can give them, and we can give them maybe some kind of a preferential market access. So probably tariff rate quotas can be one way of doing it.
Okay.
But my feeling is I don't think Trump is going to be very aggressive with India beyond a point, because I don't think he would want to take on both India and China, and I think that is some kind of a leverage which we have, and because China clearly is going to reduce its purchases from the US, they are sourcing more and more from Brazil, from Argentina, from Russia, from Paraguay, all these countries, they are very clear, and so I don't think I think definitely there is some room for maneuver from our side.
Okay. Dr. Chand, Harish, thank you very much for your time. The key takeaway from our experts is that major Indian crops are not in danger, but corn and soybean maybe, also our shrimp exports may be vulnerable if the US imposes high tariffs. But that's on rural. After the break, we are going to concentrate on industrial goods. We will be joined by the best authority on tariffs, Ajay Srivastava, a former Commerce Ministry official and head of the GTRI.